Hey guys, I figured I'd take this ride into work to explain what an IPO means. After my video of SpaceX, I had a lot more questions about essentially like IPO and accessing stock. So one, IPO stands for initial public offering. The active word there is public and initial. So there are people who own SpaceX stock already, right? There's about 4,000 employees at SpaceX. There are also institutional investors, right? So when a company like SpaceX is starting up, people get seed funding and they get folks to invest. So there are people who own the stock already. Now, the IPO essentially is what tends to be a liquidation. So the IPO tends to be an exit or liquidation strategy for some of those individuals that are holding that stock. So have you ever heard someone say, hey, I got in at the ground floor? That's what they mean. They owned this stock before it went public. Now, not to pick on SpaceX, but statistics matter here. On average, in an IPO stock can jump 20 to 30% on day one. But that's for people who owned the stock before it went public. So on average, the people who bought the stock when it IPO'd, oh God, I'm okay back there. Because not my fault, I have the light. They just weren't paying attention. All right, so what was I saying? Oh, okay. So on average, where am I? Oh, averages. So the folks who held the stock before it went public tend to make all of the money. And 2/3 of stocks, all right, 2/3, so this is not SpaceX specific, 3 years out underperform the broader market. So 66% of the time, or 66.6666 for all my math nerds out there, you could have just bought the index and did better without the stress and the volatility of this individual stock. So when you look at the SpaceX IPO, it's not only the specific interesting figures and all right. So the SpaceX IPO is not just like the only type of IPO where I always say, so on average, when that stock price jumps 20 to 30% in the first couple days of trading, the folks that are going to benefit are the original holders of the stock, not the people on the secondary market, because the secondary market is where you buy your stocks.